Hello everyone, this is Juan Sarmiento and today is Friday, July the 28th. Let's take a look at our Genie Trade account. First, let's start with what we have here, our current positions, organize them alphabetically, and then let's cover them all to see what needs to change, if anything at all. Let's start with Adobe. Adobe making new highs lately. See how the stock has come down in the stochastics, but I think it probably make a quick recovery. We'll see. In the meantime, let's go to Analyze tab, Risk Profile, and then we can take a look at what we have here. All right, we have August the 18th, so those are expiring a bit from the day, exactly 21 days, so we don't need to change anything. You can see also the strike price is 520, which is where we are right now, so no need to roll it up or down. And let's take a look at our position here like this. Okay, so we can see we have a little bit of a profit. Okay, let's move on to CRM. And this one looks good in terms of the deltas. Is up here is a little negative. August 11th, that's quite a few days, 14 as well, so 14 days from now, so no need to change. And as long as the stock, this bar here, which is the current stock price, is below the smiley face, we don't need to change anything. So let's move on to LEN. And August the 14th, and that's coming a week from now. So yeah, we could start changing things around. Start with the call, we roll over the call, and the put can be added later because we are well above that. And I'll show you what to do this. First, the rollover, analyze rolling. What I mean rollover is change the current August 4th short. I'm buying it back, and I'm going to sell something a month from now. Let's say August the 21st, September 1st. That sounds good, and that makes my trade a little more delta neutral. Look at the delta here, minus 0.81, which is fairly delta neutral. If I leave it like that, it will be negative. So this is a way to neutralize my deltas, which is a good idea to do as long as you can. As far as the put side, this one here, this should expire worthless next week. So what we would do is, as we approach expiration, we will sell 3 of the September 1st puts. Okay, and then hours later, if we do it on Friday, which we will, this one here will expire, and that just got filled. Good. So this would expire, this put here, and then we end up with a delta neutral Genie trade. But we're not going to do anything like that until next week. I just roll over only the call side because the put side is quite away, well below our current price. So we don't need to do anything with it. This is what it really looks like right now. So a decline back to 120, well, that was favorable. Let's say if it happens between now and next week, and then we can do a rollover for a much better price. Okay, so let's move on. This is Charles Schwab, and here we have August, plenty of time. This is a fairly new trade, so we're not going to do anything about it. If you want, you can hide the position, show the simulation only, and this is our current position, is close to zero profit there. UNH, and here again August the 18th, that's 21 days from now. You can see this parenthesis is exactly the days to expiration, so we don't need to do anything. Okay, as we get closer, then we would change it. If the stock was, let's say, 540, then we would sell some of the calls, roll them up. But right now we are smack in the middle, is exactly where we could just let it sit there and change it only when we get closer to expiration. I have considered several trades here, among them GS, Apple, LRCX, and okay, let's take a look here, starting with Apple. And they have earnings to come, so we just wait for that. The volatility will collapse, making it a better trade. Then we have LRCX. They reported earnings, volatility has collapsed, but look at the price, $721. That's going to be very expensive, and we can't afford it. So we are going to skip that. The other is Google, and this looks a little better. It's making new highs, volatility has dropped, earnings came well above expectations. And so, yeah, this seemed like a better trade. So let's go to the trade tab and enter here November. The strike price should be 130 or 135. We can do either one. Let's examine this first. Okay, here it is. You can do this or you can do the 135. So we're going to use the volatility here to see if it's feasible. So let's clear that paper here. And the first thing we need to do is the back month, 31.8 plus 24.3 divided by 2 and clear memory and save it, 28, okay? And then we're going to do the same for the front month, 27.1 plus 22.7 divided by 2, 24, and then subtract that from memory, and then memory recall, 3.15, very close. Let's see if the 135 is better. Okay, 3.15 is very borderline, okay? So let's clear this up and do the 135, see if that's better. So the back month is average 26.9. Let's put it in memory, and then 25.5 plus 21.1 divided by 2. What are these numbers? Right here in the bottom right corner. These are the volatilities of all the legs of all the options we intend to purchase, okay? Okay, so we subtract from memory and then memory recall 3.6. So no, this one here is closer in volatility. So never mind this one. 3.15. Do I want to trade it anyway? I'm motivated because of the earnings. They beat earnings by a wide margin. Okay, so we can calculate that too. So here we go, 1.44 versus 1.31. 1.44 minus 1.31 divided by 1.44 times 100, that's 9%. So that's pretty substantial difference in the earnings. So beat is almost 10%. So that's very good. And the stock is making new highs. Okay, the volatility. Let's go to the trade tab and look for the current IV percentile 15. That's acceptable to me. 15 is sort of my maximum. So yeah. And then we see, is this volatile enough? We suspect that Google will be liquid enough, that is. Create duplicate order, and here is the difference. So we'll get the calculator again. And 24.46 minus 23.92 divided by 23.92 times 100, that's less than 3%. So it's perfect. Fluid enough, liquid enough. Let's enter this trade, confirm and send, and then what should our trade be? I say multiple so that we can add or subtract, and I'm looking for a trade that is $9,755 or less. Okay, there it is. Four legs. I mean, 4 short options. You know, so it's 4 lots really. 4 Gini trades. Okay, so 4 copies of this particular trade. So we set it up and wait until that fills. In the meantime, the other stocks that I was considering, LRCX is too expensive. Roku is the other one that reported earnings and it's moving like crazy today. Look at that. Volatility is still high. They were expecting a loss, they got a loss, not so bad a loss. Let's see. Yeah, that's January is the closest thing we have. So yeah, I'm not too keen on that because the volatility might be too high. Let's look at it here. Yeah, it's still too high. You can see that. January, my long, September, my shorts. Yeah, the volatility is simply too high. So we're gonna skip on that. And this could be a trade, a little too late for that, but it could be a trade for a cover call. Okay, so GS is the other one, Goldman Sachs. And this one, as you can see, had earnings beat. No, it didn't. So I'm gonna not include this after all. So we got one trade. Did we get it filled? I will alter this if it doesn't get filled. As you can see, the price is above the market, so it should get filled briefly. It's a liquid stock. So okay, that's all for today. Thank you very much for joining me. See you next time. Bye bye.